Hello guys, welcome to the Trading Parrot. As we approach the FOMC meeting, you can see that we are 99.9% chances of no change. General markets are not necessarily very optimistic either, and at the moment we can see how it closed yesterday in the red. Bitcoin yesterday couldn't escape the doom of the head and shoulders. We achieved the full technical target and a little bit beyond that. In today's video, I'm gonna focus on doing a preparation room special video to see all the data that matters, everything that we can smell of a potential rally, and if we get a rally, whether it's going to be just a revenge one, where are those levels of heavy resistance where we really need to hold on to our seats to prevent another lower high. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And if you've noticed, in the past 2 days, I've been trying to catch up a little bit with the altcoins. Interestingly, today, searches for altcoins are spiking pretty high. I don't know if this candle is gonna settle, but if it does, at a value of 50, it really means something. Is retail really looking to invest in altcoins as we approach the FOMC meeting? If you compare it with Bitcoin, it's kind of pointing in the opposite direction at the moment, to the downside. If you like these dedicated short videos about altcoin updates, let me know in the comments if you want me to continue doing that. I kind of got inspired by a channel that is called More Crypto Online. It's an Elliott Wave channel that I actually really like. Ben is a magnificent analyst, and I would like to stick to my own method, of course, but I would like to do more often updates in the shorter time frames to spot some opportunities that actually I can take benefit myself, and I'm hoping that you can do as well. So the meeting is coming in at 7 p.m. UK time, so we still have about 8 hours left, and we can look at how we are approaching the meeting, starting with the Federal Reserve balance sheet that has had a good increase in here of about 6% in just a few weeks, and I think we can get rid of these lines and potentially form the shape of the actual channel like we did in this area in here in 2023. Remember, a channel to the upside on the Federal Reserve balance sheet is something definitely positive. Someone reminded me in the comments that I was looking for an actual final pivot, and we needed to make the decision on whether we place the pivot like this, and this is a breakdown, or we pick this second pivot and we say, well, this is a broadening ascending wedge in here. It still resembles a little bit what we have in here. It doesn't need to be perfect. Notice that if we took this as a pivot, it wouldn't work either. So more or less, it's a channel up. Just like this one is a channel down, and I think we can tell at least the difference that is not a channel down so far. Aggregated open interest had a hit yesterday. We were reclaiming the ascending trend line, and now we are back below. Nothing extreme. We are still in a range of 33 billion, but you can see we are approaching the FOMC with a little bit of more pessimistic moves in terms of open interest. Open interest reflects how many people are in a position. It doesn't reflect necessarily direction, but we know that into a bull market, the open interest goes up, and that is regardless of being long positions or short positions. So the more positions there is more interest in trading and speculating in the market. There is more volatility, but also this uptrend of the open interest kind of tells us that we are still in a bull market. As soon as we start seeing a downtrend that never comes back up, that is bear market, definitely. So it's good to see that we are still at the very highs of 33 billion, but for price discovery, we need to get beyond 37 billion, and that is a fact. In terms of the Bitcoin status, the way we approach the meeting, there's been a few changes. We're going to look into the charts. Here's the summary. There was a bearish breakdown on the 4-hour. On the 1 day, we had a retest of support. I'll show you later. So I remain in the gray area for these two top time frames. The daily is battling to reclaim the top of the range and exit from there in a breakout. We keep breaking out and coming back down. It is bearish to come back inside, but it's bullish to be right below that resistance and not really going lower and still maintaining the previous lows. So let's look into the charts, how that looks. Yesterday, I mentioned that in the 1 hour we could be seeing a liquidity hunt. I prepare you for that in the sense of manage your risk accordingly, because if you enter a short right here and this doesn't end up going to the downside, you get trapped. They take you back up. There is liquidity at 111, so the recipe for that potential risk was there, but you can see that this time the head and shoulders fully play out. There are no certainties in trading. The only thing you need to be certain is that you have a risk management plan and you are seeing the two different scenarios and making a conscious decision on what are you going to do on each one of them and how much are you going to make and how much are you going to lose. It cannot be just flipping a coin. I will enter a long, I will enter a short here. I don't know what's going to happen. Let's hope for the best, because that turns you into a retail. At that point, you need to wear a shirt, a t-shirt that says, I am a retail. Please rape me. All right, let's turn down the tone and let's look at the 4-hour time frame in here. Starting with the 4-hour on the RSI, you can see that we were going higher in this area. We managed to get to 70. At that point, we were over 108K. I placed my stop loss. I decided to trail it because it really was a high risk move. I really wanted to make sure that all my patrons were informed that despite the fact I took the long, I literally every hour, not every hour, but more or less every 4 or 6 hours, I send another update, moving the stop loss a little bit higher and a little bit higher. At some point, I left it at 106 point something, and we got stopped out in profits. Some people took profits at 186. I was sleeping. Here we have a hidden bullish divergence confirmed after the breakdown. What this says is that there is slightly more chances that we have from here a move to the upside. And since we lost the 4-hour and we have that level of previous support, I'm gonna move it in here, speculating that we might go into around 53, 54 on the RSI 4-hour. That is what we call a revenge rally, because you just got slapped in the face and then you have a rally to touch base with that resistance. Very rarely we see that we go beyond that without, at the very least, first testing that and trying it out. Then you can come back down, test it again later on with another revenge, and less than 10 to 5% you really disrespect that revenge level because it turns into strong resistance. But there are some occasions that we have seen something like that happen. On lower support, we still have the 29, and the 75 is still there in case we wanted to respect that top of the channel again. So we'll see where is that in the price. So the 75 today is at 115K, and the 53.54, it's currently located at 106.5. So if we were to rally today, we need to see what's there, to see if there is any chance that we really go there. Well, we got a bunch of elements, right? So we have the resistance on the 4-hour, we have a big fair value gap in here from 105.9 into 106.5. So coincidentally, that is a good incentive to go there. Then we have our typical 107 resistance that has been very important in the past. I still think is. It also coincides with the areas of anchor VWAX coming from the top and from the bottom, generating a nice channel there. The bearish case, so we just did this corrective move, and I like to think that this is coming from the previous one, basically turning this whole iteration into an A, B, and C wave. The C wave is somewhere around 96K. So how can we really get there? If we go into the 54 or 53, depending on the speed, and we see a strong rejection from there, going from that high into 29, I'm pretty sure that this red is going to run away from the price. And since it is a moving target, eventually it could match with somewhere around mid-90s. So if we were to see that move up, we need to pay attention to this particular chart. If you want to keep an eye all day on my charts with all the annotations without even needing to have an account on TradingView, join my Telegram chart section. The link is in the description. In every single post in my Telegram channel, you can scroll down to the latest post and click TTP charts. That's gonna take you here and you're gonna find some nice menus with all the altcoins and all my different charts. If you want to have unlimited access to all of them and call them as often as you want, consider supporting the channel by getting 3, 6 or 12 months subscription. On the daily, yesterday we held support at 44.48. If we go into the price, you can see that that green line in the RSI that is represented in the price with this corresponding moving average, it was at 103. We tested on Friday, and then yesterday we tested again at 103.350 precisely. I also noticed that yesterday in the order book there was a decently sized order that appear out of the blue at the top of the price if you look up in the chart, and then right after the price came in here to visit that precise area, which sounds too much of a coincidence. It never happened in this area, but in here it went straight there. The yellow never play out in here, but you can see it got bought up, so possibly they didn't put it as limit orders and they just enter market order in here, because that definitely was the bounce up of the price. When we were being sold off, I was surprised that there was no interest in buying in here. There was no big limit orders. All of this rescuing of the price happened in seconds with market orders. So, update on levels that people really want to know. We got this go to hell level at 25 that is currently at 90k.3. We have that daily support that we visited last night at 44.48. Currently at 103.3. Then we have the resistance that we need to break to produce a layer 2 breakout into the higher levels of RSI. At the moment that is at 55. So to break down on the daily, we need to break below 103.3 and close the daily there. To break out, we need to go into 107.500. And if you're new to the channel, I'm not encouraging you, make sure you understand this, that if we produce the breakout to go there and at that point enter. That really doesn't work in this market, particularly in the lower time frames where we constantly see fake outs. The play here is to have a thesis, enter at support. For example, if you believe that at 103 or in that proximity there is strength, you enter at those levels, you build your long, assuming you want to be long. I'm not saying you have to, but assume you want to build a position long there. Eventually you have your position and price goes into resistance at 55. At that point you pay attention to decide between closing with that small profit because you see weakness, or hold it because you see strength against that resistance this time and you want to trail it into higher targets. Yesterday, I actually wrote in my Patreon that I was interested in buying support at the low hundreds. Unfortunately, had tons of family issues last night. I couldn't put out a video and I couldn't trade. And this is as real as it gets, guys, because those are one of the most difficult things that you need to face when you are a trader, that you need to make your lifestyle and all your other commitments to play out with what you want to trade. That's why I don't trade the 15 minutes, because that will be even more unrealistic for me to manage. Sometimes I already struggle. Here is a daily chart and I couldn't be there to take the perfect trade at support. And I'm not saying that support is gonna hold necessarily, but I wanted to start entering with a small long. Let me know in the comments if you are already in a long. On the weekly, we are putting the third candle that looks pretty much telling the same story. Indecision, ranging, holding support, not breaking out, not doing anything. CPR levels, you can see how they are being respected for multiple weeks in a row. We haven't managed to test the resistance at 113. The previous month tells the story that we should be heading to 113 because the previous month we did it. That's what the model says. The only caveat is that we've been below the pivot. That is a mild bearish sign, but of course not as bearish as if we would have gone into the first level of support at 94.8, which we haven't, obviously. Looking at leverage squeeze, let's see where we are, how many longs and shorts we have. The signal trigger in here, that was fantastic. It moved almost 10% up. In these two lows, we have been getting rid of the longs, but not yet enough to go into everybody's short. We should enter in a long. But with this wick down into 103, you can see that we got into 29, which is obviously closer to 5 than when we were looking at the price, and leverage squeeze was at 82, which obviously at that point you don't want to be long in a crowded space. SOPR on Bitcoin is getting very close to one of the percentile bands. That means that there has been last night lots of people selling in a loss. Right before that, the previous daily candle was tons of people taking profits in the green, which I mentioned is very close to the percentile at the top, and that calls for a local top. This one is not the very extreme of the lows, but is calling for a local bottom. It will be a lot better if we are way lower, because this can continue to the downside. All we can say is a long at 1 is a lot better than a long at 103. It doesn't tell you whether it's always going to be the best entry. And Big Whale Explorer has come back down, cool off as we were expecting yesterday. That's the thing that it does every time. We have first a peak of inflows, 44,000. Now that has settled at 45,000. That's a lot. So let's see what's the delta, because yesterday there were also some outflows compensating with almost 22,000. So half of all that has been moved is still in exchanges. So that is a risk of around 20,000 Bitcoin that still doesn't go back into cold storage or into a wallet. It's still in exchanges and it belongs to large holders. So there was some movements here implying that there might be some distribution coming in. Impossible to tell how much of that they already dumped into the market, how much there is still waiting to be sold or anything like that. It's good to see that the outflows are a little bit compensating. Spot ETFs are still in the green, which is good as we approach the FOMC. Liquidity levels, yes, of course, we have the 111 is still there, the 100K is still there. In between, we have this 102.3, which I was surprised yesterday that we bothered to come all the way in here to exceed the technical target that was only 104.6, and we actually went to 103.3. And I was left a little bit cold when I look at the charts in the morning and I say, why we didn't go to 102.4? That was kind of the obvious. If you're going to go beyond that, well, you might as well go into 102 straight away. But instead of that, we are putting this bear flag in here. And since it's still holding the highs of 105.5, I placed the extension of 1, and you can see an extension of 1 on this bear flag can definitely hit 100K and slightly lower, go into 99.6, and a golden pocket extension can go into 96. So the risk is there for that flag to break down. On the 15 minute is already looking like a breakdown, but 15 minutes is lower quality than a signal on 4-hour or higher time frames. On the daily, I incorporate here the volume profile on this trading range. Since we are trading so long in this range, we need to place a point of control and see if we are above or below. We are above, and we are testing it for multiple days in a row. That is 104.2. Closing below on a daily basis and not reclaiming it quick and fast like we did in here is the recipe for disaster for the longs. Holding the point of control and bouncing back up into the top of the range and taking the previous highs is the recipe to take the red. Order book, as I showed you earlier, continues to be very thin. There is some resistance incoming at 106. Liquidity looks like this on the month on the heat map. On CoinGlass, the 111 is the heaviest level of the past 30 days. On fire charts, we can see where is the liquidity. I have to increase the percentile so you can see the levels, but really, everything is extremely low volume. This yellow in here is 33 million, and that's the biggest probably. Together with this 64 is still too low. Next to the price, we have 5 million. What is that? Where is everybody? And the purple whales are pointing down, so they don't seem to be interested to enter yet. Maybe as we approach the FOMC, this is gonna reverse. So yeah, we are above that point of control on the volume profile, still holding the 104. Aggressive buyers are really quiet in here, not being able to take the highs of 18,000. completely different to their interest to buy whatever without thinking on all this area of the chart. Let's do some order book surgery as we approach the FOMC meeting. I cannot really promise, but maybe I could cover it with a live stream. Unfortunately, at that time, parenting is a priority over making easy cash. We can see that yesterday the bid liquidity, when we were coming back down around 104, it triggered all the limit orders to come in to rescue the falling knife. That reached around 13, which is decently high, but very quickly with the bounce it went back into the negative. That's a very different behavior to what you see in this area in here. You see the sell-off, you go into 103.6, which is more or less the same price where that happened on this end. At this point, everybody was aggressively placing limit orders to buy, despite the fact that we still have another wave down. And in here, it looks a little bit like this lack of interest. And I think that is normal before the meeting. On the ratios in here, we also see that confirming it with percentiles of 45, 39, very low interest in placing limit orders to buy at all different percentages, 5, 2, 1, and 10 away from the price. Shorts are at a slightly higher risk with 127K at the moment. Not a huge delta, but we definitely can say that we ran out of this alpha to move the price lower at this point. It will have to be something else. Right above the price, we left this fair value gap. I mentioned it in the other chart. It ends at 106.5. After that, there is no fair value gap to consume on the top end. Instead of that, if we do the extension of 1, coming down from this bear flag, we can take 102.2, and possibly we could pinch 100K fair value gap. But of course, for that, we need to fully break the structure. The weekly and the daily will by then have broken the green line. Of course, that is at 103.3, and that is currently what's holding us from falling way deeper. General markets, as we approach the FOMC meeting, you can see that DXY has confirmed lower lows on the weekly, but RSI is still holding the higher low. Therefore, we are potentially forming a pivot with a bullish divergence. We already had one here, so this could be the second one incoming, still supporting that. Eventually, we're gonna get a double bottom pattern on DXY with a neck at $100, pointing possibly into 104, having some sort of relief rally after all this sell-off. Gold broke out on Sunday, but now it's back into the same, so it seems like the momentum is just going sideways, but we did have a breakout, so we should follow through with this. Ideally, a higher low by the end of this week. VIX formed the W pattern, and we have seen a green in this area in here that should continue to call for an expansion and further damage to Nasdaq and S&P, but we got these two contrarian signals where the volatility index is calling for a breakout to the upside, but Nasdaq and S&P are in the territory of confirming a breakout as well. But one of them is definitely wrong. They cannot rally together. That's ridiculous. I don't know you, but something tells me that the VIX is gonna be right, but I'm happy to be wrong. I've been wrong on indexes multiple times. It's really difficult to forecast. I can just read what I see in the moment. Guys, if you want to trade $500 for free, there's a link in the description for Bybit. I'm currently running with them a campaign that offers this $500 for free that you can trade on any of this selected group of coins. Open that link, click register to claim, pick your coin, and make sure that you make profits because you get to keep the profits. But if you want to stay non-KYC, you can find in the description my link for the exchange called Bluffin. Bluffin is currently offering to win a Model 3 Tesla, get 10% cashback and 3,000 future bonuses. You can also connect your Bluffin account using this QR code, validate that you have the requirements, and for as long as you validate the requirements, you can get 3 months recurring of Telegram charts and Pine scripts from my Patreon website. Thanks so much for watching. I'll see you in the next one. Bye bye.